Before I get into it and share my thoughts on NIO stock price action, whether or not it has bottomed out, I wanted to offer this as a reminder or a heads up for those who might not know or be aware that NIO stock, the price action of the movements up versus down, back in 2020, NIO stock ran from $3.50 to $55. That took about 6 months. Now, conversely, to the downside, over the past 3 years or so, from August of 2021 through August of 2024, the stock price went from $45 to sub $4. Now, with all of that, and then in the recent times, we've got FTDs, fails to deliver, spiking, which we'll talk more about here in just a bit. We've got also got the best earnings incoming from NIO that will be reported on September 5th. So this is a great time, especially with the possibility of broader market volatility, to tackle this topic. And it comes from, it's actually the comment section from a recent video, my NIO stock short squeeze video, which, by the way, for those who haven't watched that or watched it all the way through, I did not predict a short squeeze for NIO stock in the short term. However, I'm not ruling it out as a possibility. More on that a little bit later. But let's get into the comment that prompted me to ask people if they wanted me to talk about this. They did. So here we go. Thomas, shout out. And I'm sorry I didn't get to your comment earlier. I thought this was a NIO San Francisco comment. He had actually shared your comment on Twixter, and it took me a minute to figure that out. So anyway, the question that Thomas asks here at the end is, he said, I think we are close to bottoming out, talking about NIO stock and the price action. And he says, Aaron, tell me about this if you can. And so, you know, with respect to the shorting and that sort of thing, I've got a few things I'm going to go into. We're going to talk about NIO, Alibaba, and Ehang. These are all Chinese-based stocks and companies, but there are a couple reasons I want to hone in on these. And so we'll get into that in just a bit. But first, I want to offer this, and I have it at the bottom of the screen. It's on the ticker, my short-term stock price factors, and I've got them numbered. I think this isn't necessarily the order in which I think of them as like priority necessarily, but generally when I do see big movements up with the stock or down, one of the first things I look at is the trade volume for that particular day versus the recent history of whatever the stock is. And so for me, that's always kind of at the forefront of my mind. This also comes into alignment with the NIO stock price. Now, I have the fails to deliver, the full chart for NIO in the US represented on screen, and the yellow represents the stock price for NIO. The white lines represent the fails to deliver. When those dropped off, those white lines dropped off at the bottom of the screen, you saw the NIO stock price represented in yellow shoot up and remain up for a while, right? Until those white lines popped back up. Now, during that time frame, we had very big average daily trade volume for NIO stock. It was, I think, 80 to 100 million shares traded daily on average over the course of that time frame. So that was big volume compared to what we've seen recently, as evidenced by the fact that, let's see, recent history, 25 million shares, for example. So now you know why I say trade volume matters, and I pay attention to that. The second one I have listed is FTDs, fails to deliver. Now, I was going to talk about how this typically is more in play with growth stocks, companies that aren't profitable, but that's not necessarily the case, as we'll see with Alibaba, a very profitable company, but a Chinese-based company and stock, which is, again, why I wanted to include it in this video, because there's just so much more that I see and think about and dig into on the research side than I could ever offer in a video. So I'm just going to pull up and share with you the NIO fails to deliver data, the Alibaba fails to deliver data, and the Ehang fails to deliver data. Okay. So that's where we'll kind of talk a little bit more about the FTDs. Now, the sentiment matters, of course, but that's where I kind of want to go back to this point, because I do think it's taken a long time for the shorts to maintain and suppress stock price action. And that, I think, is best evidenced by how fast NIO stock went up back in 2020 at a point where the company was nowhere near as strong as it is now versus this time frame, which is more than 3 years later. And it took a full 3 years for them to not even impact and negatively impact the stock price to the same degree, if that makes sense. Hopefully what I'm saying makes sense. Sometimes it does, sometimes it might not. But in any event, let's now break down a little bit further because I mentioned the fails to deliver data and how they were spiking for NIO. So let's talk about that. Since I have this pulled up on the screen, and I'm sorry, I'm trying to talk fast. I feel like this is going to be a lengthy video, but But I also want to maintain my train of thought as much as I can. So here we've got the 6 million plus number that was recently reported. Now, here's one of the tricks with this fails to deliver data. This is not only when naked shorting could have been going on with the stock, but it also is not reported in real time. This is delayed data. So for example, we're usually 2 weeks to a month out even getting access to this data. And fun fact for those who are curious, this data that I'm showing you is from Chart Exchange. I actually pay to get access to more of their data. And so that's why I usually share Fintel's data in the links and as like within the description, if you ever look those up. But what I also noticed is Fintel, the one time when NIO had a big spike, I think it was the 5 million spike. Maybe it was the 3.5 million right before the 6. I can't remember, but in any event, I noticed that the Chart Exchange where I'm paying to get access to the data, they had it reflected sooner. It was 1 or 2 days before Fintel shared it on theirs, and it's already delayed data. So the point being, in my mind, is we never get to see this stuff in real time. Okay. So we're always trailing. We don't know what shorts are in what positions and when they may be removing their positions or suppressing stock price. I also think that one of the reasons it's easier for them to suppress stock price is when there is a lower trade volume on the daily level. So that's where sentiment comes into play. For example, you've got a slow bleed out of stock price. Like in this instance, we're looking at NIO, and we've seen the corresponding, volume go down over the course of time. And so I think there's a point of exhaustion at which, I don't know if it's because or only or largely because this is a retail owned and heavily retail owned stock, but I do think it's a factor. And I think the sentiment and the beat down is just ongoing. I think there's psychological warfare, if you will, that goes into this stuff for the shorts. And in the short term, I think they make a ton of money by suppressing price, whether they're doing it predatorily, illegally, or not. So for me, I just want to have the awareness that it could be going on. Now, this was the NIO stock price, and this is probably the last point I want to make. We may come back to this, but I just want to hone in on this. Now, we had this almost 3.5 million spike, and then the same week we had over 6 million. We hadn't seen a 6 million spike since all the way back in January of 2020. And it was a few months later that NIO started its big move. Now, I don't know if we're going to see something similar to that, but this 5 million spike also had happened in the not so long ago past here. I remember talking about this in a video as well. And that also hadn't come into play for a very long time. So my point is this: if retail, let's say, owns the majority of the float, or maybe even the full float, and all that are being utilized to suppress stock price are fake shares that are just floating around the ether or created by potential predatory shorts, then yeah, in the short term, we could see more price suppression. But now I want to move over to Ehang, and we'll come back to Alibaba in a little bit. This is Ehang. EH is the ticker for this, and this is another Chinese-based company, a very compelling, interesting company. I low-key kind of like it. And we've seen this thing with fails to deliver in its early history. It was listed in 2019, it looks like. And there were, of course, we see the spikes of fails to deliver here. And then we see a big move with the stock price. And then we've got a big spike here, and then a whole lot more spiking. And we see the stock price come back down, more spiking of the fails to deliver, a really big one here. And it just continues. And the stock price just gets brought down and down and down and down. Now, one of the reasons that I decided to share Ehang and Alibaba and NIO is I looked up all three of them. I was curious about the suspicious company that I have referenced. And this is a market maker, and they're a short seller. They're called Citadel. And this is a massive company. Now, as a market maker, they kind of get an allowance, if you will, to naked shorting potentially. And so that really muddies the water even more. We're already not getting access to real-time data. But when I saw they have a short position in all three companies, and all three companies have big fails to deliver spikes over the last couple of years, I thought, okay, that's interesting. Now, one of the reasons I wanted to bring up EH or Ehang is this. This is recent stock. This is the earnings call, and I'll link this for those who want to review it. They had a positive earnings, and it was Friday, August 23rd, heading into the weekend, basically. And it was a surprise positive earnings. And this is what the stock price did. If you look back here, and this is the 1 month trailing, you had a stock price that was basically in the $11 and $12 range, couldn't get above. And then all of a sudden, good earnings, and it jumps up to over $15. Now, if we go back to the things that I talked about, and I've got them at the bottom on the ticker again, trade volume. The first thing I looked at when I saw the stock price for Ehang was taking off on Friday, I think it was Friday, yeah, was the increased trade volume relative or versus the recent trade volume. It was much, much higher than what it had been. And so I don't know if Citadel or someone else maybe got caught in a short squeeze, but there was a lot of buying. And so that, I think, is a validation that trade volume does matter. And so when we see the spikes on the trade volume in conjunction, especially in conjunction with a big move up by the stock price, I do think it matters whether or not that is maintained over the short term, unless sentiment changes for the stock or the company, and or you get profitable earnings for a period of time after that. I do think those things matter. So, and by the way, at the end there, I've got hashtag not financial advice, just to make it clear. This is just my view, the way that I think about things, and it is to be construed as nothing more than that. So at the very least, I hope it is entertaining, maybe boring. Congrats if you've stayed awake this long. Now let's talk and look at Alibaba, because this is where things get kind of, for me, they're really fascinating, very interesting. Now, this is, I believe that Chart Exchange, or maybe the data on fails to deliver, only tracks back to 2014. So this is the data that we have from 2014 on for them. But one of the things that I did want to talk about, and just do this kind of live time, real time, is the correlation potentially in time frames for these three stocks, in case we saw them all kind of peak at the same time. And in case, let's say, Citadel is the suspicious character that has the short position that has been negatively impacting the stock price for not just NIO, but maybe all of these in a basket, or maybe even some others as well. But before I do that, I can't help but notice right here on the screen, look at the 2014 to 2016 timeframe here with these big fails to deliver, the spiking, and look at that stock price. And oh, look where it is now. Low again after a long time of that, followed by the big move up with the stock price. And that was about the, let's see, what are we talking about? That was 2020, towards the end of the year, 2020 for Alibaba. All right, now let's look at Ehang. Ehang with its spike was actually not at the same time. Theirs was a little bit later. It happened into early 2021 is when they had their big stock price move. So not quite a perfect correlation. How about NIO? This is just kind of fun for me. This is what I do. I nerd out on this stuff. I normally don't share this much. So congrats for sticking around and for being brave enough to see just a little bit of what goes on in my brain, my mind. It's scary stuff, I'm telling you. This is NIO in late 2020. So interesting. There seems to be, at least if you expand by a few months, there's a correlation with these in the stock price, because the peak for NIO was early 2021. We look at Alibaba again, the peak would have been, yep, that same time frame, late 2020, early 2021. And then Ehang also, and it had been listed, was it listed? Yeah, I guess late 2019 is when it was listed. So it was listed a little later than NIO, but they're all in that time frame. That's early 2021. That's very interesting. I don't know. I'm just curious what people's comments are going to be, or if you want to take things further and do a little more digging and research on your own, you are welcome to. Before I share my thoughts, this is Laser's video from this weekend. I will share a link for it down in the description if you haven't watched it. He is expecting NIO to break out at some point. He has been expecting it. He also mentions in this video, the heavy manipulation by shorts means we can't, there's nothing guaranteed. And I couldn't agree with him more, especially after we've looked at some of this failed to deliver data, the FTDs and the history, and maybe even how Citadel could be influencing stock price for multiple companies, including these 3 Chinese companies. So those with their stock prices, interesting stuff moving forward, I think. And so that's where earnings maybe comes into play. Maybe this aligns with NIO making a big move up. Laser also mentions in this video, I don't want to give it all away. He does a nice breakdown. One of the reasons I like him is he offers, potential for upside or downside. In other words, he's fairly neutral, although long-term he is, I believe, a NIO bull. He's someone who tries to look at things from an observational standpoint. And that's the way I try and do it as well. Because the less bias, the better, I think, as an investor. So that's kind of my view. In any event, he talked about how it could go down lower. Now, if it does, where does it go? And this is where I'm going to kind of now weigh in with some of my thoughts. Okay, I got to hit the pause here because now we're going to look and talk about price action and where I think and why I'm thinking the way I am. And there are a lot of factors at play here. So bear with me. But this, again, is the reminder. Look at how fast NIO stock was able to move up in those 6 months when the FTDs dropped off. Now, even with elevated FTDs, it has taken about 3 years for this NIO stock suppression to go as far as it has, and it still hasn't gone as far as the upside move that NIO made in those 6 months, right? So now with that in mind, we've got to look at the FTD chart. The reason is this. We have the spiking FTDs. Now, with spiking FTDs and either broader market volatility, I do think we could see NIO stock drop below the $3.60 level, something like that. But I do think it's unlikely because it has taken so long for the shorts to get this thing back to that point, stock price action-wise, which is all the way back here when NIO was in that $3.50 range in that level. And that is why I think there are really only 2 scenarios where NIO stock does dip below that $3.60 level. One is if big money decides to buy, and I don't see them, if they decide to buy, buying anywhere other than as low as possible, as cheap as possible. So I would see them suppressing it, whether illegally or predatorily or not. That wouldn't surprise me. If there is earnings that can be spun in a negative news narrative sense and in conjunction with perhaps stock market volatility, those would be scenarios where I could see NIO stock going down below the $3.60 level. And it's not, I'm not specifically citing 360. That's just kind of the range I'm watching. But my thing is like this. I will add more if it goes there. If it doesn't, I'm still going to add more. And I have my long-term position. I'm just not upset from the standpoint of I am a long-term investor and I am willing to add if the shorts keep these prices in play. But I do think there's at least a 50% chance we have seen the bottom. I think stock market, broader market volatility could take NIO stock down below that $3.60 level. I also think some gamesmanship, something involving the shorts, possibly around the earnings, could take it down, but it could be so they can buy and add. And that's kind of my thinking. And again, to reiterate, I'm going to say it again, because sometimes you look at the chart and this level of FTDs hasn't been here since January 2020. All right. And even so, it has taken so long for shorts to get this stock price down. And in the meantime, this is a credit to the NIO global community. There are a lot of great people who have gone deep on the research. And I do believe there are a lot of small retail investors like myself and a lot of folks who are bigger than me, but still small investors who have added and will continue to add and or hold for the long term. That's my thought. That's my take on price action. Now, the flip side of that is you better believe we could see a short squeeze. And what I'm curious about is, let's go back to Ehang, because remember, Ehang made basically a $4 move, $3 to $4 move. It was at least a 30% move, I believe, in just a day or two off of strong earnings. And that is with Citadel shorting them. Citadel is also shorting Alibaba. And now here's my thought with Alibaba. And you know what? I didn't queue it up, but I will link it in the description. There's a really good, it's a longer interview between Brendan Aarons and Thomas Hayes from Great Hill. And it's a very long, but man, they break down the addition and the importance of the addition of Alibaba with the South Connect stock exchange in China. And I believe that's going to go into effect in September. So I will be watching the stock price action for Alibaba to see what it does. And I'll also be looking back if we see a move up, a big move up from Alibaba, I'll be looking at the trade volume. And then later I will check the FTDs to see if they have dropped off. I just won't be surprised if or when at some point we do see money flow back to Chinese stocks. But you know, I don't know what the time frame is. I think that's the hardest thing to try and predict or call. And this was an interesting kind of way to look at things because we've got a very profitable company, Alibaba. We've got two younger growth companies in EH and NIO, and they're all sort of operating in different sectors, but they're all Chinese based. They all share one thing in common, and that is Citadel shorting them. And they all have pretty elevated FTDs. Certainly you could argue that Alibaba's are not so high, except that that Alibaba, I almost said NIO, is a very profitable company. So it's crazy that they were doing like a share buyback and getting FTDs come in at the same time. That is crazy to me, but not if there aren't that many shares available per the real float. And so maybe the naked shorting is essential for some of these companies to just try and keep suppression with certain stocks. I don't know. I'm curious to hear from you all now that I have droned on for, I don't even know how long, but I want to close with a final thought. And that's this. My Twixter, I made a couple of slight changes to it. You know, the steps for growth and discernment. And these originated for the rules for discernment of spirits. This is for like spiritual combat. St. Ignatius, many years ago, came up with these steps, but they're very practical. And I found them very helpful, even with respect to investing, business interests, even living, you know, day to day, you know, within your personal relationships and lives. So I wanted to share it, and I'm going to keep it up for a little while. The steps for growth and discernment. The first step is, of course, become aware. For example, in this case, let's talk about it. NIO Stock and the FTDs. I didn't know about the FTDs, so I couldn't have a true appreciation of what was going on back in 2020 until after the fact. Once I became aware of it, I took the time and I studied, and I mean hundreds of hours into this stuff. And there's so much that I still haven't even offered or talked about with respect to the shorting. There are so many tricks that some of the nefarious predatory shorts have, but that's part of the understanding. And once you have the understanding, then you can take whatever action you choose. And for me, I was so happy to get my long-term goal of the shares, the 2000. That was my long-term goal for way back in 2020, when I was afraid I was going to get priced out and wouldn't be able to get them all. And now I'm at a point where I'm so confident in the company and in my research into things like FTDs and how those have negatively impacted the stock price that you better believe I am not scared to add. So that's my take. That's my thought. I think we've got I'm going to give it a 55% chance that we have seen the bottom for NIO stock, but the 45%, which is not quite 50%, is I think we will see something, whether it comes through in the FTDs later as more elevated spikes in conjunction with maybe big money buying or something like that. Probably there would be some something in line with the earnings and a negative news narrative. That's what I would watch for right away. And then later we'll check the FTD data. The other would be trade volume. If trade volume stays low on the daily side of things, it's easier for shorts to suppress stock price. That's the reality. And until a company proves that they're profitable for multiple quarters at a time, I think it's just too easy for the shorts and the short thesis to remain in play, because that's where kind of the sentiment does come into play. And I think it matters. I do think it matters. Of course, the other scenario, part of the 45% possibility that NIO stock could go down lower would be broader market stock, market volatility. Broader. I'm trying to say broad. I don't know what I'm trying to say. I've been talking too long. That's the issue. I'm probably not going to cut that out. I'm going to leave that so you can laugh with me at me. The point is, if there's something crazy that goes on with the market, and I am absolutely not ruling that out. That's why it is so high at that 45% that I'm saying. I think 55%, we've seen the bottom, but even being close to 50% is why I've got a few bucks, a few dollars on the sideline in case NIO does dip down there. And to be clear, when I say a few, I mean at least $3 is what I have ready to deploy. I'm kidding. It's at least enough that I could buy a full share. So anyway, let me wrap this thing up. Thanks for stopping through. Have a great day. I'll see you all again very soon.